Gold just hit $5,143. Let that number sink in for a second. A year ago, people laughed at the idea. They called it crazy. They said, gold is dead, crypto is the future. And now? Now those same people are asking me one question. Am I too late? I'm going to answer that today. But here's the thing. The answer is not what you expect. Because while gold is grabbing headlines, there's another metal sitting quietly in the shadows. A metal that hasn't made its big move yet. A metal that some of the world's top analysts say could quadruple from here. And I'm going to tell you exactly what it is, why it's happening, and how I'm personally positioning my money right now. By the end of this video, you'll know the real plan. You'll know why 2026 could change everything. And you'll know whether you still have time or whether the window is already closing. Stay with me. This is important. Let's talk about what's actually happening in the market right now. Because the headlines are only showing you half the picture. Gold is at $5,140 today. That's a gain of over 60% in the last 18 months alone. Silver, on the other hand, just pulled back. It's in what analysts call a correction phase. And here's where most people panic. Here's where they look at the chart and say, I missed it. But I'm telling you that correction is not a warning sign. It's an entry signal. Let me explain. In 2020, gold pulled back 15% before exploding to new highs. In 2023, silver dropped over 20% before launching 40% in the following months. Corrections in precious metals during major bull runs are not the end. They are the reload. Now, here's what they're not telling you on mainstream financial news. The paper gold market, the market of futures, ETFs, and contracts, is trading at a volume over 250 times the actual physical gold mined each year. Think about that. For every 1 ounce of physical gold that exists, there are 250 paper promises floating around. This isn't investing. This is a shell game. And Wall Street banks, they profit enormously from the system. They sell you paper contracts. They take your money. They give you exposure. But not the real thing. And when this system cracks, and I'm telling you it is already cracking, the people holding paper will be left with nothing. The people holding physical will be holding everything. This wasn't random. This was engineered. And once you see it, you can't unsee it. Let me break this down into the 5 forces driving this market. Because when you understand these forces, the path forward becomes crystal clear. Since 2020, the United States alone has printed over $10 trillion in new money. The Eurozone, Japan, and China have done the same. When you flood the world with new currency, every dollar in your pocket buys less. That's inflation. That's not an accident. That's policy. Gold has been the world's answer to currency debasement for over 5,000 years. Every single time a government has printed its way into a corner, gold has risen. Every single time. And right now, the global debt pile has crossed 330 trillion. That number will never be paid back. The only option for governments is to inflate it away. And that means gold and silver go up. Not maybe, not possibly, mathematically. Here's something shocking that most retail investors don't know. Central banks around the world bought over 1,000 tons of gold in 2024. That was the 3rd consecutive record year of central bank gold buying. Russia, China, India, Saudi Arabia, they are all moving away from the US dollar. They are converting reserves into gold. This is de-dollarization in real time. And when the world's reserve currency loses its status, even partially, the repricing of gold will be violent and fast. Now let's talk about the metal that hasn't fully moved yet. Silver. Silver is not just a store of value. It is an industrial metal. It is inside every solar panel on Earth, electric vehicle, semiconductor, every 5G tower, every medical device. Global solar capacity is projected to triple by 2030. EV production is accelerating in every major economy. And silver supply, it is not keeping up. The Silver Institute reported a structural supply deficit for the 3rd year in a row in 2024. Demand is rising. Supply is falling. That is a price explosion waiting to happen. I'm telling you, silver is the sleeping giant of this cycle. We are living in one of the most geopolitically unstable periods since World War II. Conflicts in Eastern Europe, the Middle East, tensions in Asia. Every conflict disrupts supply chains. Every conflict pushes nations to hold assets outside the banking system. Gold and silver are the only globally recognized assets that no government can print, hack, or freeze. When the world gets scared, money moves to gold. We are seeing that right now. JP Morgan has raised its gold target to $6,300 per ounce. Goldman Sachs, Citibank, and Bank of America have all issued bullish gold forecasts for 2026. On silver, several independent analysts are projecting a move that could see silver quadruple from current levels. Let me say that again, quadruple. If silver is sitting at $30 today, we're talking about a potential target of $100 to $120 before this cycle ends. That is not fringe thinking. That is based on historical gold to silver ratios, supply deficits, and industrial demand math. The gold to silver ratio today sits around 90 to 1. Historically, in major bull markets, that ratio compresses to 30 or 40 to 1. If gold hits $6,300 and the ratio compresses to 40 to 1, silver lands at over $157. I'm not saying that's guaranteed. I'm saying the data points there, and I'm not ignoring it. Here's the uncomfortable truth. If you own a gold ETF, you do not own gold. You own a promise. You own a piece of paper that says someone else is holding gold on your behalf. And in a real crisis, in a real financial reset, that promise may not be honored. History is full of examples. In 1933, the US government confiscated gold from citizens who held it through banks. In 2013, Cyprus froze bank accounts overnight. In 2022, Russia's foreign reserves were frozen in 48 hours. The system can move against you faster than you can react. Physical gold and silver, coins, bars held in your possession or in a trusted vault cannot be frozen, cannot be hacked, cannot be printed away. That is the difference between paper and physical, and that difference could be everything. So here's what I'm actually doing. I'm not panicking about gold being at 5,143 because I know corrections will come, and corrections are the gift. My plan has 3 parts. Part 1. I am dollar cost averaging into physical silver right now, every week, a fixed amount, regardless of price, because I believe silver has more percentage upside than gold from here. Part 2. I hold a core position in physical gold. Not ETFs, not futures. Physical gold stored securely. This is my insurance policy against a financial reset. Part 3. I am staying patient on new gold entries. If we get a dip back toward the $4,700 to $4,900 range, I will add aggressively. If we don't get that dip, my existing position already works. I'm not chasing, I'm not panicking. I'm executing a plan based on data, not emotion. That is the difference between investors who build wealth and investors who lose it. Now let me give you the practical steps, because knowing the thesis is only half the battle. Execution is everything. Step 1. Buy physical, not paper. Find a reputable, established dealer in your country. Check their ratings, their history, their buyback policies. Pay the small premium for physical. It is worth it. Step 2. Start small and build. You do not need to go all in today. Even allocating 5% to 10% of your portfolio to precious metals is meaningful protection. Start there. Add on dips. Step 3. Diversify between gold and silver. Gold is stability. Silver is upside. A 60-40 split between gold and silver gives you protection and growth potential. Step 4. Secure your holdings. If you're holding at home, invest in a quality safe. If you're holding more than a few $1,000s worth, consider an insured private vault. Do not keep metals in a bank safety deposit box. That defeats the purpose. Step 5. Stay informed. The market is moving fast. New data comes out every week. Central bank reports, mining supply data, industrial demand figures, all of it matters. That is why this community exists. To cut through the noise and give you what actually matters, if you haven't subscribed yet, do it now. Because what's coming in the next 12 months, I don't want you to miss it. Let me leave you with the single biggest takeaway from everything we covered today. You're not too late. The rally in gold and silver is not over. It is entering its most powerful phase. The drivers, money printing, de-dollarization, industrial demand, supply shortages, and geopolitical instability, are not going away. They're getting stronger. Gold at $5,143 today could look cheap at $6,300 tomorrow. Silver sitting in correction could be the buying opportunity of the decade. The people who act on data while others are paralyzed by fear, those are the people who come out ahead. That's who I want in this community. In the next video, I'm going to show you exactly how to evaluate a silver dealer, what red flags to watch for, and which coins and bars give you the best value right now. That video is coming soon. Make sure you don't miss it. Hit that subscribe button right now. Turn on the notification bell. And if this video gave you value, if it made you think differently about your financial future, please like it and share it with someone who needs to hear this. Because the window is open. The data is clear. The only question is whether you're going to act.